partners here at BDO. And I want to thank you guys for taking the time to come and listen to us talk today on sort of an accounting viewpoint of COVID-19 and the various things that are taking place. In the event, I worry that in the event I'm running a sort of a three-screen system here. I'm running the slides on my right. I see the video on my left and the cameras in the middle. So if my head tilts a little bit, I'm probably just trying to make sure one of the three is taking place. Other than that, we'll start into the presentation here. And we start again, we'll do a bit of an introduction. Like I said, I'm the gentleman, I guess, on my left there, Greg Laughlin. I'm the A&A partner, or one of the A&A partners here at the Owen Sound location. My area of expertise is more on the accounting and the assurance side in terms of financial statements, as well as being a generalist in terms of partners for giving business advice to both clients that are profitable as well as nonprofit organizations and so forth. The person who'll be jumping on in a couple of seconds with me and helping me with the presentation is Adam Vanderdyne. He's a tax partner within our office. His specialty is basically on all tax matters, both corporate and personal, and that's what he's built his practice on. And so the two of us will keep you going for the next little bit, and we'll go from there. Adam, do you want to take it away?
Sure, thanks, Greg. So I'll just go through sort of an agenda or an overview of what we're going to be going through today. So first we'll give a disclaimer, then we'll go into some of the extended filing deadlines and payment dates, workforce government support programs for employers. Then Greg will be going through government financing programs, and then we're going to go into a little less technical material and go into what the industry challenges are, what our clients are experiencing and other businesses in our community are experiencing. We've got an adapt to the new normal, just a small case study, some return to work strategies, and then we'll go into a few tax planning and other tax considerations at the end, and we'll kind of close it off with a resource listing of where you can go to get further information. So just a sort of standard disclaimer is that any tax advice in communication is not intended or written by BDO to be used and cannot be used by a client or any other person or entity for the purpose of avoiding penalties that may be imposed on any taxpayer or promoting, marketing, or recommending to another party any matter addressed herein. Also, all of the information provided is of a general nature and is not intended to address the circumstances of any particular individual or entity. Although we do endeavor to provide accurate and timely information, there can be no guarantee that such information is accurate as of the date it is received, or that it will continue to be accurate in the future. No one should act upon such information without appropriate professional advice after a thorough examination of the particular situation. So again, we're providing general information today, and to make you aware of certain situations, we're definitely not providing specific tax advice, as we don't have all the facts of your specific situation. So first I'll go into COVID-19 has definitely had an impact on filing deadlines and payment deadlines that we're used to. We're used to, for individuals, the filing deadline of generally of April 30th, basically due to kind of things shutting down and more difficulty with access of information and whatnot with COVID-19. The personal tax return filing deadline was moved from April 30th to June 1st. You will note on the slide as well that there's been no change to farmers or self-employed individuals that always had the extension to June 15th. Now the filing deadline was April 30th, with the extended filing deadline for farm and self-employed individuals, but the payment due date was always April 30th. So even if you had the filing extension to June 15th, if you did have a balance owing, that balance owing was due on April 30th. So what they have done is they've extended the filing deadline to June 1st, as mentioned. However, the date for payment has been moved to September 1st. And as long as you have made the payment on or before September 1st, the CRA will not be applying late filing penalties or charging interest. Now, we did sort of take the approach that we wanted to meet the filing obligation of June 1st, just to get rid of any uncertainty relating to how the CRA may apply penalties or interest if there ever was a reassessment and you ended up owing more money than the return was originally filed, even if you did make that payment by September 1st. So for the farm and self-employed people that are yet to come up to that June 15th filing deadline, we would still recommend to try to meet the filing deadline if at all possible. And the extension to September 1st also applies for installment payments, personal installment payments after March 18th. So it would be applicable to the June 15th personal installment payment. And similarly, GST, HST payments are due September 1st. But they did not make any changes to the filing deadlines. However, CRA is on record, similar to the T1, saying that as long as the payment is made by September 1st, late filing penalties and interest will not be applicable. Now we'll switch over to the corporate filing deadlines and payment due dates. So for corporate income tax returns, the filing deadline is either June 1st or September 1st. So for June 1st, it applies to any returns that would have a filing due date after March 18th and before May 30th. So typically that would be September and October fiscal year ends. And just recently, they announced that a September 1st filing deadline will apply for any corporations that would otherwise have a filing deadline on May 31st or in June, July, or August. So effectively, November 30th year ends, December, January, and February year ends will now be due on September 1st. The extension also applies to specific forms and elections that are to be filed when the return is due as well. The extension also applies to balances and installments payable under Part 1 of the Income Tax Act. So there are actually some taxes that are not subject to the extension. So again, our best advice is to try and file and meet the usual filing deadlines if at all possible. And for charities, the charity return, the T3010 for all charities is now due December 31st, 2020. So a significant extension for the filing deadline of charity returns. And of course, the payment date for charities is not applicable because generally they're not subject to tax. So now we'll get into a couple of the workforce government support programs. There's an ever-growing laundry list of programs out there relating to COVID-19. And we're just going to focus on a few of the programs and initiatives that are part of Canada's broader COVID-19 economic response plan. And we will provide a link at the end of the presentation to the Canada Revenue Agency's site, where they have a comprehensive list of all of the programs. So we're just going to go through a few of the ones with the broadest applicability. So one that we'll go through first is the Canada Emergency Response Benefit. And this is the taxable benefit for workers who lose income as a result of the COVID-19 pandemic. And eligible recipients would have access to a benefit of $2,000 a month for up to 4 months, so essentially 16 weeks, during the period March 15th to October 3rd, 2020. The program date was extended to October 3rd recently. And there is a simple and easy to use access where Canadians can begin to receive the benefit available online. There's a portal, and the portal is up and running and requires some basic information, including your personal information, your social insurance number, and answering a few questions to ensure that you're eligible. And eligibility basically is you are residing in Canada and you're at least 15 years old. You've stopped working because of COVID, you're eligible for EI regular or sickness benefits, or you have exhausted your EI benefits between December 29th, 2019 and October 3rd, 2020. Also, you had an employment and or self-employment income of at least $5,000 in 2019 or the 12-month period before you apply for the CERB, and that you have not quit your job voluntarily. So you can't quit your job voluntarily and go on CERB. That's one of the requirements. There's also some mechanisms now, because we will get into some of the programs, they can overlap. So now there is also a way to, if you have applied for the CERB and you do get recalled to work, there is a mechanism to repay the CERB. And another thing to note is that when the program initially came out, you could have no income from employment or self-employment. And the rules have been changed recently so that you can receive $1,000 in total compensation for each claim period, with the exception of the first claim period, where you could receive no more than $1,000 for a period of at least 14 consecutive days within the initial period. And one thing to note is that the benefits are taxable. So there is no withholding at the time that the CERB payments are made, but they will be included in 2020 income as taxable income. So just one concern is making sure that if it does put people into a position where they are taxable, there could be a tax liability owing, as there is no withholding. So another program is the Canada Emergency Student Benefit. And this benefit is designed primarily for students who do not qualify for the Canada Emergency Response Benefit or EI benefits. So eligible recipients would have access to a benefit of $1,250 a month for up to 4 months, similar to the CERB. There is an extra $750 available if the individual is disabled or has dependents. Again, there's a access to receive the benefits in an online application, and the program is available from May 10th, 2020 until August 29th, 2020. Eligibility, there's sort of two groups of people that may be eligible for the Canada Emergency Student Benefit, and that's post-secondary students. They'll be eligible, post-secondary secondary students, as well as post-secondary graduates and students who have recently left their postgraduate studies. That's the first group of individuals, and they can apply starting May 10th to June 6th is the first eligibility period, and there are 4 eligibility periods. Now, graduating high school students may also be eligible for the CESB. So high school students would be eligible if they've completed or expected to complete high school, or receive or expected to receive their high school equivalency in 2020. Also, they have to have applied for a post-secondary educational program that starts before February 1st, 2021. So if you're a high school student and you complete high school before June 7th, you're eligible for all of the periods to apply for the CESB. If you graduate after June 7th, you can only apply for the 2 eligibility periods starting July 5th to August 1st. So essentially, as a high school student, you're not eligible for the period if you're still in school. So one other program that we'll just touch on, and it's more of an issue awareness one because the rules are very technical, is there is a work sharing program that is available, and the program is designed to help eligible employers avoid laying off staff when there is a temporary reduction in the normal level of business activity that is beyond the control of the employer. So the program is available to both federally and provincially regulated employers, and the government has extended the maximum duration of the work sharing arrangements to 76 weeks, and it has also waived the mandatory waiting period. So again, the concept of this program, or just sort of the general mechanics, are that there has to be a reduction in work hours of 10 to 60% for the employees, And the employer would be responsible for the hours worked by the employee, and then EI would sort of supplement the remainder of the week up to 55% of the time that was missed as a whole. Furthermore, the employer must maintain existing benefits. The program must be a minimum duration of 6 weeks, and it basically involves finding groups of employees and having them share equally in the reduction of work hours, and then getting their pay topped up through the EI benefit work sharing program. So again, the rules are very technical, so we won't go through them in detail, but there have been recent changes. The program is a little less attractive now with some of the other programs that we'll get into, but there is some overlap that you can apply for certain programs and still qualify for the work sharing program. Originally, there was some pretty kind of stringent criteria and submissions that had to be made. So the application process has been streamlined significantly. Furthermore, there used to be a requirement that the employer had to report a 10% reduction in business activity, so that has been removed as well. And there was a cumbersome process that involves the approval, and that is eliminated as well. And the application has been reduced by several pages. So now we'll switch from sort of government support programs targeted at the employees or self-employed, and we'll switch over to programs that are targeted towards employers. So the first one is the temporary wage subsidy for employers, and the second is the Canada Emergency Wage Subsidy, the CEWS. So the temporary emergency wage subsidy was actually one of the first programs that got rolled out, and it got rolled out relatively early on. And the temporary emergency wage subsidy is basically a subsidy up to 10% of pay during the period from March 18th to June 20th, up to a maximum of $1,370 per employee, and a maximum of $25,000 per employer. And it's relatively straightforward in its mechanisms as well, in that basically the employer would calculate their entitlement to the 10% subsidy, and they would withhold that amount that they're eligible for from their payroll remittances. So there's no application process, there's no need to pay the employee and then recover the funds from the government. It's literally basically short paying your payroll remittances up to 10% to the maximum of the per employee amount or the per employer amount. Now, the one caveat of that is that you cannot reduce your required CPP or EI payments. So the 10% really is a reduction of the income tax withholdings. So again, the temporary emergency wage subsidy is immediate, and it was designed to provide immediate cash flow relief to employers to the extent that they could avail themselves to this program. The temporary emergency wage subsidy is taxable to the employer in the year, so it does form part of their income. And you do have to keep adequate records of your calculations to support. And also, if you choose not to reduce your remittances, you can ask for the subsidy to be paid to you at the end of the year or transferred to your next year payroll installments. So announced after the temporary emergency wage subsidy was the Canada Emergency Wage Subsidy, or the CEWS. So for this program, there is a 75% wage subsidy up to a certain maximum amount, and that's $847 per employee. There is no per employer maximum amount. And to be eligible, one of the criteria is that the employer must have shown a decline in revenue, we'll just say of 30%. The first period, the reduction is 15%, but that's meant to reflect that COVID really hit sort of halfway through March. So for the first period, if you experienced a reduction of 15% in your revenue, you would qualify for the program. There's an application process, and it's done on a monthly basis. However, if you qualify for one period, you automatically qualify for the next period. So if you qualify for the first period, you automatically qualify for the second period. If you meet the qualification requirements for the second period, you automatically qualify for the third period. So there are several definitions that you must meet to qualify for the Canada Emergency Wage Subsidy. And the subsidy covers 75% of an employee's wages, and that's basically based on remuneration of $58,700. So key definitions are eligible entity, so it has to be an eligible entity, but again, the requirements are actually quite broad. It includes charities, not-for-profits. It excludes certain employers. Public service bodies basically are the biggest ones, so municipalities, colleges, schools, hospitals, those types, but the eligible employers are quite broad. An eligible employee is another definition, eligible remuneration. And there is the revenue test. So revenue from the business carried on in Canada from arm's length sources. And there are several options when you're calculating whether or not you meet the qualifications of the Canada Emergency Wage Subsidy. So you can calculate your revenue or your decline in revenue based on the normal sort of books and records of the entity. So that tends to be on an accrual basis. However, you can elect to use a cash basis. And you have to be consistent throughout the period once you have chosen a method. And then when you're looking at the required revenue reduction, there's sort of two periods that you can look at. So for period one, March to April 11th, a required revenue reduction of 15%. You can either look at revenue for the period of March 2020 compared to March 2019, or you can look at an average of revenue between January and February of 2020. And again, once you've chosen a reference period for which to measure your revenue, you have to stick with that method for the remaining periods. So again, period two is April 12th to May 9th. And to be eligible for that period, either you have to be eligible for period one, or your April revenue has to be less than 30% of your, must have a 30% decline over April 2019, or the average of January, February, depending on which method you chose for the first period. And period three, May 10th to June 10th, a 30% decline with similar mechanics to the first two periods. Now, the Canada Revenue Agency did come out recently, and they've extended the queues for an additional 12-week period. So there's going to be 3 more periods. However, there haven't been any details released on how this is going to work. So there's only speculation at this point, but the speculation is that the first 3 periods, it was tied to a reduction in revenue. However, the concern is that now we're kind of trying to restart the economy, and the question becomes, does it make sense to tie eligibility for the queues to a decline in revenue? So again, we haven't seen any further detail. It's been a little while since the CRA has made the government has made the announcement that the periods have been extended, but there's been no guidance so far as to whether there will be a required reduction in revenue, or how they're going to, if the reference period is going to be applicable as well. So we're still waiting to hear how this is going to work. And in the same announcement, they did announce that they were going to extend the applicability of essentially who an eligible employer was to cover some groups that were left out of the first round of definitions. So it has been extended to include partnerships where one or more non-eligible members that may be eligible now, Indigenous government-owned businesses, registered Canadian amateur athletic associations, registered journalism organizations, and non-public education and training institutions will now qualify as well. And now Greg's going to go through some of the government financing programs.
Thanks, Adam. We had a series of government programs that came out in terms of wage subsidy that turned around and did broader based financing to help Canadians. But for some businesses, wage subsidy wasn't enough, and they were struggling and had to find different mechanisms to help with funding for these businesses to go forward. And so one of the first programs that came out was called the Canada Emergency Business Account, the CEBA. And so the concept inside of here was that the government essentially backed a $40,000 loan that was being paid out through your financial institution, and then they were turning around and saying, we're going to start with us with a group of businesses that were in the 40,000, had payroll between 40,000 and $1 million. And if you had payroll in 2019 of that amount of money within your business, then you immediately qualified. And essentially you would go online to your financial institution, you would jump through your online account, you would click a button and you would fill out an application, and they would require you to put in some numbers from the T4 summary, which is your payroll summary for the year, on in the program. And then from there, it usually took 3 to 5 business days for approval, and you would receive this $40,000 loan. Slightly afterwards, the program was expanded to go from companies that had payroll from 40,000 to 1 million to companies that had 20,000 to 1.5 million, expanding the program. Since then, a third round has also been increased to deal with companies that don't pay their employees or their ownership through salary, but rather through dividends, and they're restructuring that part right now within the financial institutions to allow them to have access to those funds. The preliminary discussion at this point is that to access the funds, if you are not with payroll, and to get the money, you're to show that those funds were being used for non expenses that could be delayed. So essentially, rent, utilities, payroll, things that weren't created by the company to just move money from the company out, such as like a shareholder draw or a payment to the shareholders. With the $40,000, you would get the money, and so it basically would be interest free. And then basically on December 31st, 2022 is sort of the first initial payment date. And so if you pay back the funds on December 31st, 2022, the government said, instead of paying back the whole 40, we will only request the $30,000 back. And the $10,000 would be a grant, and that grant would be taxable to the corporation in that year. If at that time you're unable to pay the whole $40,000 back, then it gets shifted over into basically a loan, and then that loan will get paid over on a monthly basis, and clear out within the next 3 years, and there'd be no interest on the balance. So essentially, the government's saying, if you upfront it, we will give you the grant, but if you're unable to at the time, we will turn around and we'll give you an interest-free loan to help that process go. So that was the first of 2 financing programs that were put in place. The second one's a little bit larger. This one here, they went through the EDC and the BDC in trying to find ways to directly finance and to lend to Canadian business holders. The BDC is a little bit more on lines with what I will say the average or the regular businesses. The EDC has a few more its and buts to it, and it generally will deal with businesses that'll do a little bit more business overseas or internationally. But I'm going to just talk about the BDC approach at this time. So the BDC was offering an online solution. You would go onto the BDC webpage, you would click the button that said you would be applying for financing, and you could essentially approve or get financing for up to $100,000 through their online tool. And then those funds were basically being sponsored from the government of Canada to businesses. The BDC would use a lower rate, a lower interest rate, and I think approximately is around 2.7, 2.8% was what the running rate was going on those funds. And you would have 1 year of interest only payments, and then 2 years of regular payments, and then you'd have a balloon payment that you would make at the end of the third year. And so they would start with that as $100,000 application. If in cases that 100,000 wasn't necessary or wouldn't meet your cash flow needs, then the BDC had a process where you would then submit in a full application. They would put you in contact with the representatives, and there you could go from anywhere from 100,000 to $2 million. And the amount that you could qualify for a loan was based on a variety of topics, including, or a variety of items, including things like obviously your business cash flow, your debt load within the company, and also the type of statements that were released in terms of from your yearly or from your accountant on a yearly basis. If it was a notice to reader, which is the normal or the normal statements that generally would get released, they would allow up to $300,000 is their max cap. If it was a review or an audit where more assurance is placed and those statements are, the accountant spend a little bit more time on those statements, making sure all the numbers are in line, then they would go from 300,000 to 2 million. And so that was a process. Their BDC still has this available, and it is still there for access and for funding, just as much as the 40,000 is still available today if you haven't done that for any of your corporations. The BDC, the one part I would say from the experiences that I've had at this time is that they are running lots of applications at the moment. I think when the reps said to me initially that when they were doing the $100,000 online application, a regular week would be maybe about 30 or 40 applications in a week. In the first week of COVID, they basically took in excess of 1,000 applications on a weekend. And so they're working through their queue. And so there is some timing involved in there. And so something you should be aware of if you're going down that road is that it's not as quick as the $40,000 loan where within 5 days the funds are in place. This is a process that can take easily 4, 6, 8 weeks to be able to go through the application process, to vet all the information, and then to release funds. So those are the various that are in place right now. It's a snapshot of the programs. But there's more to now where we are with COVID-19 than where we probably were a month ago or 2 months ago. And so we've kind of labeled that as sort of the adapting to the new normal, the challenges that are being in place. And this is more where the direction of businesses are going. And so what we're finding now is that we've lumped them together and said that there's a series of questions that are being asked by business holders, business owners, and it starts from whether or not finding the time, right? We're too busy taking care of our immediate concerns to devise a business strategy for COVID-19. Access to information. We don't know if we have all the tools, the financial information needed to make informed business decisions. Challenges within our operations, right? We're experiencing operational challenges that might put us at risk. Cash flow, right? Do we have enough liquidity to be able to solve our issues? And then what are really my options, and do I have time to investigate them and try to get a plan of attack? And so, it's a struggle and it's a challenge, and people are looking and saying, wait a minute, where do I go? What's the next steps? How do I take what I used to have to where it's gone to, and now how do I go forward? And so the comment that we start with, I like using quotes and different comments in there, came from Charles Darwin. Says it's not the strongest of the species that survives, nor the most intelligent, but the one that's adaptable to change. And it's true today in terms of the business environment. Right now, we're finding that that how you did business 3 months ago isn't the same way you could do business today, and we're all learning on the fly. And it's really important to determine plans, to have things in place that allow us to understand where our clients are going, how our clients our customers are finding us, how they want to do business going forward, and to be able to be adaptable to anything that comes up as we go. Um, a lot of times, different companies use different terminology and different words, and things that sometimes we hear about is being nimble and agile, to be able to adapt to circumstances and to change on the fly, and not to stick to one set route. So we take all of this stuff and we start shifting, and we say, okay, things have changed from where I was back to March and April on three fronts. We look at everything as being whether they're your employees, your clients, or your customers, or your lenders. So when we talked with employees, the first thing was within our initial response to any employee was to inform them what was going on, reassure them, right, and then look at what your COVID-19 response was going to be. For a lot of businesses at that point, it was almost a pause. It was a turn and say, okay, we're going to send people home. We're going to reshape a little bit, and we're going to figure it out. And some of that was legislated by government, and some of that was by employers by figuring out where they are. But now the focus has to now shift to bringing people back, to finding ways to make sure that they stay safe, that they're feeling safe in their place, and that their well-being is top of mind. With customers and clients, the initial communication was how your company was responding to COVID-19. That you were taking into account your employees, you were taking into account your customers, how you were going to be able to do business within that first start. And now it's basically to the shift has now become to inform them that you're now your business, it's up and running, it's starting to go forward, and in how you're taking their concerns and how to run and how to be able to meet their demands and go forward. Lenders, again, the initial communications there was what was COVID-19 doing to your business? How would that result in whether or not you were going to make all your payments in terms of loans and leases? Banks were offering opportunities to defer principal portions, right? Those conversations were starting. And now the focus is going to be from the lenders is going to be, how are you going to be on a go forward basis? And so those the message is turning from that pause to now, okay, everything was a little bit in crux, and now it's going to be about how does it go forward. And so when we break those things apart, we start looking at 6 areas in here, which we refer to as the leadership team, the operational performance, the business vision, the communications, the cash flow, and the human resources. And each one of them has a specific component of your business. Now, it doesn't mean that everyone has to have 10 points to it, but it does turn around and says, how are we trying to take this area and run our business going forward in this post-COVID, or going into post-COVID-19 process. And so we look at a few comments in there, and we say, okay, on the leadership team, having the right people and the right jobs to make the right decisions at the right time. And we're going to talk about a little bit more about that in just a couple of seconds and what that can mean. Business vision about turning around and accepting a little bit of the new reality of what's taking place, and how to take advantage of opportunities. Those are opportunities that are being provided to you by the public, by the customers themselves, opportunities that may be coming to you from your competition because they're unable to meet certain needs or certain requirements, and looking at that and readjusting your sight line on your business and saying, what is it, the things that I can do that can keep me profitable and lead me down the next path. Whether it's performances and understanding where things are in terms of your operations, and that ties really much into cash flow. One of the things that I think that doesn't get enough say in this area, and one that we've recommended a lot to our clients, is about now really understanding what's going out and what's coming in. And you can go in a variety of different ways. You could do it in a spreadsheet, you could write it down on a piece of paper, but you now is the time when people have to look and saying, how do I manage my flow of my flows to make sure that we are profitable on a month by month basis. And it takes a harder look at your business and saying, wait a minute, are these costs acceptable at this time, right? And turning around and saying essentially that, do these costs bring profit back to my company, which is really, as we go forward, is the optimal setting. And so cash flow, when you start doing the budgeting and you start doing the spreadsheets, that shows us the cash flow. And then if you're doing that on a timely basis, then from there you get to be able to look and see, you get the operational performance that says, is this working? And if something's not working, it's now about being agile and nimble to turn around and say, what changes do I have to implement to be able to get the best results? Um, and then communication, it's about always keeping an open door, about informing your clients and your customers about how you do business, ensuring that their needs are being met, right? Talking to your employees about making sure that they're staying safe, and ensuring that they know the guidelines that you want to that are in place. And then that also deals with suppliers and lenders, and making sure that you have a good grasp of when products coming in, how long it's going to take to order it, and what timelines there might be on back orders, as well as dealing with things like the bank, and other shareholders or other stakeholders who are looking at your results and saying, does this make sense? There are lots of times in our business when we have clients that come in, and they'll come to us, and we ask simple questions, or think they're simple questions to start with, that says, how do you think the year went? And a lot of clients turn around and say, well, I'm not too sure, I'll let you look at the numbers and then you tell us. And where we want to push more our clients to now is turning around and having healthy conversations, whether it's monthly, biweekly, it's quarterly, that says, do they have modelings and methods to ensure that they know where they stand at any given time. The last part of it is human resources. I know that there was a session on that a little earlier this week, I believe, and we're to talk about different items there. And it's understanding for your business here as an overview about the different health guidelines that need to be in place, and protecting your employees, right? Ensuring that they're in the best possible place to both succeed for you and not be worried about any dangers that could be presented, and ensuring that you've got policies in place that ensure that those things take place. We go from there, and we said I was going to talk about leadership team, and it's built really on what I'll call 4 major items, which is maintain communication, which we've talked about over and over, and it's a word that just it's there at all times, is really having that open dialogue that says, where are we, what are we looking for, what are the goals in place. um, Building redundancies within your organization, cross training people, making sure that other people can take over tasks, especially as we never know whether or not there's another spike in terms of the business, or in terms of COVID-19, and making sure that if something was to take place, that you have the redundancies in place to be able to seamlessly flow your business as best as possible. Implementing customized solutions is again about challenging the norm. It's about turning away from it and saying, just because this is how I did it every day for the last 10 years doesn't mean that this might be the way I can do this going forward, and finding new ways to be able to find solutions both for your customers, for yourself going forward, and then proactively identifying gaps. And again, it's about reassessing your business that says, where are we struggling, and what places what things can we put in place to eliminate those approaches. And a lot of it now, again, I sort of go back to my initial quote that started, is it's about adapting. It's about turning and saying that now it's an interesting time depending on how you look at things, and saying there's an interesting series of challenges that can help grow businesses to being different, to being healthier, to being better than they've have been, by constantly reassessing the norm and saying, does this make sense? There are a variety of tools that we use when we deal with our clients and chat with them, from things like we talked about budgets and about cash flow, from looking at revenue dollars per wage dollars paid, um, and there's various ratios that you can look at and saying, okay, what is it that I'm trying to accomplish, because those things go take place here. The last part I would always bring in here, as a whole, is that I encourage people to turn and write goals down on paper, to turn around and say, what's my 1 month goal, what's my 3 month goal, what's my 1 year goal, what's my 3 year goal, and put those down, write them down on paper, and turn around and every day or every week at the end of the week, look at that goal and see if you've accomplished it, whether it's moving backwards, whether it, and if it's moving backwards, then you can ask yourself, why is it moving backwards? What have I done? What have I done this year that allow, or what have I done over the last little bit that's stopping me from achieving those goals, so that I can start looking at some of these other things about implementing solutions, identifying gaps, so that I can fill those goals and go from there. Written goals are perhaps one of the most powerful tools that can be used to achieve results. The last part I wanted to was kind of talk about, and it's a semicircle in here, but it's sort of the road to financial recovery, and it starts with crisis management, right? We've disruption of operations, government mandates, essential services. Then we start looking at the economic impact, and then sort of we're gonna, right now we have a high level of unemployment rate, right? Stimulus packages are being unveiled, right? And then it starts now becoming from what's maybe outside your control to now start turning around and saying what's inside of your control. Adapting your workforce, looking at the people that you have, understanding your products, your mix. How does that work? And then you can go from there to making sure that my business stays strong, start building a continuity, worrying about fraud, and making sure that when we reduce people, that we're still controlling things that are taking place in our business, to start building stability, having more regular transactions, and then working back and then optimizing our organization and our business. And so we talk a little bit more about that. And again, I revisit a few things about saying, here's the things on cash flow management that we really wanted to touch base on with everyone, which was start with preparing a monthly operating budget, understanding your cash flows. What do you expect to come in? What do you expect to go out? And revisit that, whether if you do that on a monthly basis, revisit it weekly. Turn around and have a look at it and says, how do I compare? um, the best place is not to be always in that says, if I think that I'm going to do X, and whatever X might be, but maybe it's, let's say I'm going to do I need to do $1,000 in sales for everything to work in 1 month, and looking and saying after week one I'm at $100. Well, don't worry, I got 3 more weeks, I'll get to 1,000. Well, the question after week one should be, why am I at $100? What's taking place? Is 1,000 still realistic? And if 1,000 isn't realistic, if I got to curb that down, what else has to go for me to stay even, or go from there? And if I can't be even, how long can I survive of being not even? And having those stark, honest conversations. Um, Constantly revisiting your operations, understanding both the timing of your revenue and your costs, and discerning methods to provide maximum service at minimal expenses. um, I look at this a lot, like in terms of staffing and payroll, and understanding that there are times in your day when you're not as busy, and so those are times when maybe we shouldn't have as many people in, and that maybe we have to man our locations more individually, and go from there. And when those times are when we're busier, to make sure that that's when we're spending the dollars to make sure that those services are being provided. Identify any large deferral or balloon payments that will be unnecessarily done during COVID-19 and plan accordingly. Adam talked a little bit about at the early part of the presentation along the lines of HST being deferred, installments being deferred, looking at different things that are taking place. For some of you, you've gone to the banks and they've deferred principal payments. And really now is a good opportunity to look and saying how everything's been deferred, but at some point it still has to be paid. That stuff hasn't been forgiven, it's just been moved. And so the idea now is that you not only do you have to look at your current operations, but we have to look down the road and saying where what funds will we have in place to handle those balloon payments, or where are we going to go to make sure that that takes place. Ensure that you have sufficient staff for critical activities. Again, reassessing your operations, looking and saying these are the things that require us that we need to succeed, and so we're staffing the things that we need. And then ensure that the third parties on which you depend can adequately service your business. One of the things that we found early in COVID-19 was this what we'll call the supply chain, was businesses that were servicing other businesses and ensuring that they had the products to help give to or to sell to you, so that you can move to the next layer. And so it does make sense to have good discussions with your suppliers on what's their stock level look like. Will they be able to meet your demands? And that may be up or down depending on where we are. As we seem to be recovering from COVID-19, we're seeing for the most part less and less cases in a lot of the provinces. Right, we have a little bit more stability and hoping that our supply chain will stay a little less disrupted. But we still have closed borders into the U.S. We still have our neighbors to the south and some of the things that are taking place there that can make disruptions, and that still doesn't take into account potential second waves or anything along that lines. And so having a good understanding of those processes, or what's in place in your supply chain, can help you meet the demands of your clients when they need to, and not be a victim to the circumstances. So again, it's something that needs to be constantly reevaluated and reshaped. From there, we kind of, the last part I wanted to just chat about quickly here was sort of the success factors and breaking it apart really again into try to simple terminology, which is one is that cash and time are very much in place, and making sure that we're doing everything we can to maximize that for your business. Workforce management, making sure that you have both an understanding of what you have in people, how it works within your within your business, ensuring that you have the right amount of people at the right times, and working on that and constantly revisiting those areas. Organizational assessments, understanding your strengths and your weaknesses within your business. Turning around and making sure that you've got a grasp of again of what you do really well and maximizing on that, and finding ways to take your weaknesses and minimizing those at the time. And then look for opportunities. Instead of staying to the norm, have a focus on what's going on around you. Keep an eye on what complementary businesses are doing, what your competition is doing, and looking for opportunities to expand or to shape how your business will react to adapt to the growing situation. And so then, so we wanted to talk for a few minutes about sort of the return to work strategies. And again, I won't jump in as deep as what the HR side would have done. They would have given you a full presentation there. But I just wanted to talk a little bit about a few things in here. And again, kind of using a quote, the broader challenge is to lay down a longer term strategy that endures after the crisis of the moment. And so the things here are saying, what are you doing to ensure you're protecting yourself and your workers, right? Looking at the measures that you have in place. Do you need PPE at your business? Are you ensuring that you're minimizing the potential for outbreak within your business? Um, and going from there, do you have procedures in place on how to deal with your customers and clients in a safe manner? um, and going from there. And each person in each business will have what they believe is the bare minimums that they want. But at the end of the day, the goal has to be turning around and saying that there's always the possibility that another outbreak might take place. There's always a possibility that outbreak might affect your business. But when you look back, have you put all the recommendations or all the necessary items in place that says that I've done everything possible to protect my people, to make sure that my customers are safe, and that if there is an issue that's taking place, I'm not missing the warning signs and eliminate or maybe not even looking for the warning signs, but I've got them in place and I've got a policy that deals with that stuff. The other part about, does your business have a complete and up-to-date health and safety policy, and making sure that in today's world things have changed, and making sure that you have policies in place that deal with COVID-19, and ensuring that your employees know those policies and go forward before you reopen any of your doors. Um, there's a lot of what I will call due diligence in terms of making sure that you understand the needs of your staff before they come back. For some of our staff, they're ready to come back and they'll do whatever you want, and they'll work and say, yep, we're good to go. But there's quite a few people who have different circumstances in their life, that have higher risk people maybe that they're surrounded with. They might be themselves concerned, and we have to turn around and we have to make sure that they have a voice that's heard, and that we understand what they're looking for, and making sure that we've taken all the precautions that we can to make sure that the workplace is as safe as possible for them. And then we start talking about training and saying what's the new norm, and going from there, right? There's a lot of things about how many people can be in an area. How do we deal with when those limits are being overflowed? How do we ensure that we have the right flow through on our business, so that we can supply the things that we are to our customers, while not putting anybody at risk, and making sure that we stay within the Ministry of Labor guidelines, right? And then about communicating, and we've said that before. How are you going to communicate all of those changes to your employees before they return to work? Whether it takes a part where you have a couple of smaller staff meetings for the people who have large client or a large workforce, to maybe one meeting where if you could separate out, and walking through the processes and making sure that their voice is heard, but that the policies and procedures are in place to run your business effectively, and allow for your employees to feel safe on their return. So I'm going to flip it back to Adam here, and he's going to talk a little bit about tax planning strategies and other considerations. And then we've got a couple of other things left, and then we'll open it up for some questions for anybody who has anything that they would like to add, and we're happy to answer away. Adam?
Thanks, Greg. That one of the key takeaways from the past couple sections there, that there are some fundamental principles and some best practices, but every organization does have to customize its own solution to this and revisit it for whatever stage of the process in COVID-19 recovery or post COVID-19 reality they're in. So I think it's very interesting to see that it's not a one size fits all. If what worked for somebody else isn't necessarily what's going to work for your organization. So we will get into just a few tax planning strategies and other considerations, sort of our experience of what we're seeing, or things to consider to kind of benefit our clients, or things that people should be considering. So COVID-19 again has created and some opportunities for long-term planning for individuals and businesses. So one thing that we're looking at with some of our clients is income splitting and trying to minimize the overall tax liability of a family unit by making use of marginal tax rates and things like that to the extent possible. So there are still certain planning techniques to facilitate that. One would be prescribed rate loans. spouses or corporations or trusts or whatnot. But we do have to keep in mind that the government did come down with the tax on split income rules recently, a couple of years ago. So we still are being mindful those rules as well, and doing proactive planning to make sure that we fall outside of those rules if there are opportunities there. Business transition is another thing that this has really brought this into focus as well, and sometimes in a positive way, because we do have some family businesses where the younger generation is now more actively involved than ever, and are actually coming up with the solutions to dealing with the reality that we're in, that involves larger emphasis on technology and leveraging technology and resources. So business transition is a big one right now. Another one is considering whether it's a good time to implement what's called an estate freeze, but basically kind of freezing a shareholder's value and allowing future growth of the company to go to the next generation or to go to somebody else. And again, partly, depending on the situation, some people's, investments have gone down or whatnot. So now could be a good time to explore, pushing future growth and future value to the next generation. Another one that has to be revisited is that if there were clients that undertook an estate freeze, which is essentially kind of locking in your ultimate tax liability, unfortunately, they may have locked in at kind of a higher value than their business is worth now, or if it's investments that they're worth now. So we are seeing that people are kind of re-examining where they are and considering possibly refreezing their assets and pushing that future growth to the next generation. Another one, there's some concern, and again, it's speculation. We don't have the answers. We don't have a crystal ball. All we know is that there's a plethora of programs out there that involve spending, and there is some concern of how will the revenue be generated to pay for that. Is it increasing the capital gains inclusion rate? Is it an increase to HST? Is it introducing the concept of an estate tax at the federal level? These are all sort of questions, and again, we don't have the answers, but we want to make sure that we're sort of being proactive in considering what to do for our clients. So one option could potentially be crystallizations, which means making use of capital gains exemptions or undertaking transactions to trigger gains to pay a tax liability, advance a tax liability for fear of future income tax rates going up. Another one to not discount is scientific research and experimental development. There's a lot of organizations out there now that are coming up with solutions to problems and figuring out how to redesign businesses or redesign products or redesign systems. And a lot of that can be considered scientific research and experimental development. And there are significant tax credits out there, some of which are refundable for organizations that are undertaking scientific research and experimental development. So definitely one that's at the front of our minds, just given the necessity to relook at processes. Another one that I went through in some detail were the government grants. We're definitely doing a lot of work there to ensure that people do maximize their access to these programs. The programs are there for a reason, and they're to provide assistance to individuals and organizations to help get through this time. So a lot of the cash flow management and implementing the strategies that Greg mentioned of getting back to what the new normal, government grants and making sure that you take advantage of the assistance that's there will free up some of the cash flow or some of the resources that are required to get business back up and going. And then just some other considerations. There's going to have to be some consideration. A large majority of people are working from home. One thing that the government may be looking at is simplifying the process for being able to claim expenses for employees that are working at home, that incurred home office expenses. There's very strict rules on that, and depending on the situation, people that had to spend a significant amount of time working from home may or may not qualify for business use of home expenses, things like that. So that's another one to kind of keep an eye out for some communication from the government, as well as if there's going to be sort of a flat, credit or a deduction allowed for people that had to incur expenses to, facilitate working from home, whether that's buying some equipment or something to facilitate a home office or working from home. Is there going to be some relief there? So those are just some of the strategies and sort of considerations that are on our radar. Any other considerations, Greg?
No, I think you've grasped them all, Adam, or a good amount of them. I think the big one on the non-tax side is that reassessment of your organization and looking for those opportunities to maybe stretch out into different areas that you might not have already been into, and expanding on those areas. And then the opposite also takes place about looking at parts of your operations and saying, is this as profitable as we would like, and then determining if it's not, is there ways to spin off or to sell that component of your business, and then stick with the area that's the more profitable center. So heading forward onto that, the last part is we've added for some resources here. I'll keep that on the screen for a couple of minutes, but BDO Canada has, within BDO.ca, we have a COVID-19 homepage where we have a vast amount of our partners providing thought leadership, talking about the various programs that are in place, talking about different tax strategies, and then other types of ways to take on technology and to add to your business, and change as we're changing within COVID-19. We've got the Government of Canada website in there that just talks about their economic response plan, and then the County of Grey and its COVID-19 homepage as well, where it's bringing more of a local flavoring in. So a few different resource tools that are available as an overview. I'll leave that on the page for a minute. Our last slide is really just to bring in any questions that we have. Adam and I are happy to answer as specific as you want. Feel free to please type away anything that you would like to ask on any part of the presentation, and we'd be happy to answer from there.
Awesome, that was great. So I'll just wait a couple minutes for some questions. Thank you so much, Greg. Thank you so much, Adam.
Our pleasure. I could also understand, Taylor, that a lot of questions might be very personal in nature. How does this work or how does that work? Both Adam and I can be reached at the BDO offices, just through the Owen Sound office. Both of us are happy to answer if there's a one-off question that you don't wish to ask online. We're happy to answer those questions for you.
Okay, awesome. So I do see one question here. Please speak to the issue of self-employed government support. So we did go over a couple of those, but I'll let you take it away.
Yep, I can cover some of the programs. Some of the programs are available to unincorporated businesses. So I mean the CERB, the Canada Emergency Response Benefit, of the $500 per week up to a maximum of $2,000 a month for 16 weeks would be eligible for self-employed people. And again, it really depends on which program you would be availing yourself to, depending on your situation, whether or not you're kind of prevented from working or whether you're just at a reduced capacity. So again, the queues would also be available to self-employed people if they had employees as well. And maybe Greg can comment on the finance.
On the financing side of things, the $40,000 is available to some self-employed. There's a little bit more ifs, ands, and buts on that. There, at one point, excuse me, that you had to have a registered business name, sort of almost have a registered business account with your financial institution. If that's not available, then some of those programs do shut them down. But there's still the ability through the BDC to still to receive government or government-backed loans from them via being self-employed, depending on again on cash flow and so forth. And as well as local financial institutions are also providing support for whether they're deferral of principal payments or additional resources again, but theirs is a little bit more based on the going concern of your business, rather than where BDC might be where they've recognized that COVID might have a bit more of a complication and are offering a little different solution.
And I do see a question here, and maybe there's a question mentioned, if you qualified for Qs for 1 month, you automatically qualify for the next month. What if the next month you were not down 30%? That's correct. So if you qualified for the first period and you met the revenue test of the 15% down, but then in the second period you were not down 30%, you would still qualify for that second period. And then in the second period, or for the third period, you would then have to have had your revenue decline for 30% because you couldn't rely on having qualified for the previous period. So 100% correct that if you qualify in one period, you're automatically qualified for the next period, regardless of the revenue reduction.
In a perfect world, you'd actually, as you're building up, or that part would be that one period where you were down, as you're bringing more people back to build up your business, you would have the wage subsidy to help boost the cash flow for your business into the future as you're bringing back people. So it gives you that extra month was the ability to grow and build with some additional cash flow.
Yep, and I should just say that that's for the first 3 periods. We haven't received any guidance on period 4, 5, or 6, or how the revenue reduction or the qualification period requirements are going to be treated. So hopefully we'll find something, we'll hear something in the next couple of days.
Do either of you see the commercial rent reduction question?
I don't see it, but if you want, is it just a quick question about commercial rent?
Sorry, so it says, question regarding commercial rent reduction program. Would a charity that has commercial rental property qualify for this program? Information on program says landlord must report rental income on tax return. Charity does file charity return.
This program has been kind of one that's been jumping up the last little bit, and I apologize. We're still, as we're going, legislation hasn't completely come out and play, and so we're finding that we've got lawyers that are giving us commentary as well as what we're grabbing from CHMC as well, and going from there. If you would like, one of the ones I would say there is to reach out to Adam and myself directly afterwards, and we'll do a little bit of a poll for you and get you some some specific information for your situation.
Awesome.
Yep, and just to add to Greg's comment, there are programs that we do have legislation, and it's quite manageable to go to the legislation and look at it and determine whether you meet the definition or not. The rent is one where we don't have legislation yet. So we can kind of go on the information that's been provided. However, it's sort of a wait and see until we actually get the legislation in our hands and can rip through it.
And it's I just want to add to Adam's point there. Even when you take look at some things like the wage subsidy, how much it changed from the initial commentary that started with wage subsidy being released. It was to then initially the first month had to be 30%. That was March. Then they changed that to 15 to reflect the half month really that was affected. They talked about the second month was added, that if you qualified for the first, you got the second. So things change until we see the legislation, and so we're constantly trying to make sure that we give the most accurate information there.
Awesome. So there's just one question here on what your phone number is that they could reach you at potentially, or
Not a problem. 519-376-6110 will get you into the office line. And then we have people working from home and being able to redirect calls. And so Kate would be happy to redirect your call to Adam and myself.
And I'll just quickly mention that this webinar is recorded and it'll be available on the Grey County site in case there's something that you just want to fast forward and listen to one more time, or maybe you want somebody else to have a look at it. So yeah, so any other questions? If not, I think we'll wrap it up. Greg and Adam, do you have anything else that you would like to add?
Like I said, I think it's an opportunity to reassess, to look at your business and to look at those challenges and to find ways to overcome and to succeed. And for those that are on the call and for those that listen even as a webinar, I wish you guys all the best. If Adam, myself, or our group can help you out, we're happy to go through a call with you guys and find solutions that will help you become profitable into the future.
And I'll just say as well, there's a comment, maybe a sole proprietor is different description than a self-employed. This represents a good portion of mom and pop businesses and need help. Fair comment. I think they do need help, but don't forget that you can always reach out to, whether it's your member of parliament, your member of provincial parliament. It's worth contacting them to let them know if you don't qualify for the programs that exist, what else needs to be done. And that's part of their role as well, is to make sure that things get communicated up the chain of where there may be gaps in the incentive programs that are out there. So again, fair comment, and I would suggest following up with you, potentially with your MP or MPP.
Awesome. Okay, well, thank you so much. I'm going to stop the recording now.